Welcome to the Simply Financial podcast. I'm your host, Christopher Calandra. Today, I have returning guest Vince Carter, who was with me not too long ago, and we had such a great conversation that I asked him back. I think listeners love this idea, but I probably love it even more. Vince, you may remember, is a podcaster, a husband, and a father. He has over 30 years of corporate experience, and he has had a variety of positions in the telecommunications and financial management industry. He's a self-described money nerd, which explains why he and I get along so well. I often describe myself, as do others, as a geek. And he recently started his own podcast, and it coincides with the stuff that I like to talk about, think about, and the work that I do here as a certified financial planner at Elliott Wealth Management Services. So without further ado, as the cliche goes, Vince, thanks for joining me this morning.
All right, Chris, my pleasure. Thoroughly enjoyed our last conversation. Looking forward to doing it again.
Yes. So your podcast, tell us about your podcast. I know we talked about it the first time around, but just to set the stage, give us a quick primer on your excellent podcast.
All right, my podcast is CFO at Home. And the whole premise behind the podcast is that in every family, or nearly every family, there is one person who really shoulders the burden of most of the financial planning, for lack of a better way of putting it, in terms of thinking about the family's financial future. So how are we going to send the kids to college? How are we going to save up for that house? How are we going to retire? That seems to gravitate naturally to one person in the household. And that's really who CFO at Home is for that individual, because when that load, that burden falls on a person's shoulders, it can be a burden. So the podcast is there really to support them and to give them both practical tips to help them out in that charge. And also we talk a lot about relational things because money is relational.
It is for sure. So you've been doing the podcast for how long now?
Almost a year. It will be a year in July. Actually, I have episode 52 in the can.
All right. And you are a self-described money nerd, as I said in the opening. So this topic of yours has been a keen interest for way longer than the podcast. So over this last year, has there been anything that you've changed your views on since starting the podcast?
Absolutely. And I think that's been one of the unexpected benefits for myself is I've had a tendency to view the subject of money pretty much from my vantage point and my life experiences. And I think that's what a lot of us end up doing,
Sure.
particularly once we have a little time under our belt. The podcast has been an excellent opportunity for me to expand my way of thinking about things. I probably have a slightly different philosophy and thoughts on debt, for example. I have probably evolving thoughts on credit. And oddly enough, and this one may be a little bit out in left field, on cryptocurrency. So, in no particular order, right off the top of my head, those are the things that I've probably had some change of heart about.
So we talked a little bit about that last time. So we'll save cryptocurrency for another time. In terms of debt and credit, tell me a little bit about where you were in your thinking on the subject prior to the podcast, and then tell me how that's unfolded differently as you've experienced some different things doing the podcast.
Well, first of all, let's take debt. My attitude about debt was very, very strict in terms of almost never, ever, ever having any debt. Uh, Debt for a mortgage, of course, was permittable in my little mental world,
Right.
but I was pretty closed down in terms of any other form of debt. And it's not like I've done a 180, but I've probably softened my view on that just based on conversations I've had. And my view has probably evolved, and I feel better about it now because I think there's some nuance in my views that weren't there before. And this whole thing is nuanced. I mean, everybody's situation is different. There's no reason to try to apply cookie cutter answers to every situation. So really, it just allowed me to kind of loosen up and be a little bit more, I think, realistic.
So, follow-up question, because my views of debt were one way early on in my career in life. I'm talking about me personally on my wealth building financial journey. And then there was an episode in, the kind of the middle of my career. I'm 50 now. And so, where I used debt way more than I had ever done before and ever done since. And I think about this topic because I think you're 57, right?
Yep.
So I think I've come around to the thought that the 50-year-old Chris and perhaps the 57-year-old Vince has views on debt which are wise, but they may not be perfectly applicable to somebody in their 20s and 30s or in a different stage of their life. There's some good principles and guidelines, but rigid rules might be a little problematic because I did some things when I was younger that I don't necessarily regret, although it was risky. What do you think about age affecting your views on debt? Is my long-winded question.
I think age, just like most things, age will affect your views on debt. I think that's part of it. And I think also generationally. So I don't know, 30-year-old me and 57-year-old me have different opinions on debt. But also the 20 or 30-year-old today has radically different viewpoints on debt than probably either one of those individuals would have had. So I think it's kind of a combination of things for me. Yeah, I think my aging and my experience have kind of softened some of my edges in terms of being so strict about that. But by the same token, as I reach out with a podcast and I'm talking and I'm trying to reach people of different generations, I realize just from a pragmatic standpoint, I probably need to soften those edges as well.
Yes. Can you give some examples on if someone came to you and was requesting your sage advice and the conversation involved potentially the use of debt? Can you give some examples where that softer, less rigid approach to using debt might come into play? Can you give some examples?
Yeah, I'll give you a concrete example from this weekend. As a matter of fact, because, I had a conversation just this weekend. A friend of mine called me who's getting ready to go on a trip for the first time since COVID struck. So she's really excited and she's making all these plans. And she calls me and it's like, Vince, I'm trying to make all of these travel plans, but I don't have a credit card. Is it okay for me to have a credit card? Now we've known each other for a while, and we've had conversations,
I
and like
see.
a lot of people, she's had some issues with credit cards in the past. The old me would have said, no, no, don't do that. You're gonna get back in the same situation you were in before. Blah blah blah. I would have been very strict about it. But instead of that, we took a few minutes and talked about it. And it's like, well, you know what you've been through in the past. Do you feel like this is a good idea? And we talk through it. And just knowing this person and knowing how they've evolved and changed, by the end of the conversation, it's like, I think in this case, it will probably make your travels easier just from the logistics of making travel arrangements and that kind of thing. My only thing is don't put any money on the credit card that you don't already have. You're using this as for transactions only. You're making it easier on yourself. You're protecting yourself from fraud as you're traveling and you're using your credit card here, there, and the other place. Don't put any money on it that you don't already have, and
Right.
you'll be okay.
So you could use it as a tool, but be careful that you don't use it inappropriately.
Yeah, yeah. And as far as credit cards, that's kind of, if I wanted to sum up my new softer view on credit cards, that's probably it in a nutshell. I mean, this whole thing about never have a credit card. I think there are people who don't need to have credit cards, particularly if they have a history of credit cards getting them in financial trouble.
That's
So
fair.
at that time, for a season, perhaps they probably need to not use them. But that's also an evolving situation. It's not like you're bad with credit cards. You're bad with money. It's also kind of a bad message to give a person, by the way, that it's telling them, well, you're not responsible enough for a credit card.
Right.
No, maybe for a season, you need to back away and then reapproach it with a more healthy attitude in terms of how you use them.
Yeah, I think that's a great softer approach, that there is an ebb and a flow with these things. So just because you shouldn't use a credit card today doesn't necessarily mean it should always be that way. And if you're irresponsible in a phase of your life and get yourself into some financial difficulty, it doesn't mean it's always going to be that way. I know in my household, we use credit cards a ton. For my business, almost any business expense I have, if I'm entertaining clients, if I'm buying something for the office in terms of supplies, almost all of it goes on the credit card. And I know that there's an argument against doing that. Dave Ramsey is a perfect example of that. He would say that that's terrible. And he'll point out that if you use credit cards, because it's a frictionless transaction, you're likely to spend more money and your discipline is likely to decline. I think the statistic, Vince, is that if you use a credit card, you're likely to spend 17% more than you would if you were paying cash, just because it's so easy. But I use the credit card for business and it works out well. It's good for accounting, organization, tax preparation, and tracking purposes. And the convenience is outstanding. And then on the personal side, Vince, we use a personal card for the house and most things, groceries, gas, things like that. We use a credit card and we pay it off every month. I think over the 25 years of marriage, I don't think we've ever paid interest on a credit card, but we've always used it and it works for us, but we've never gotten into big trouble. And I think that's kind of the dividing line. And I like what you were saying about if somebody's feeling overwhelmed financially and they need to make some changes to improve the trajectory of their money management and their wealth building, kind of get things under control. A good thing at the very least to say, time out, let me not use debt. Let me keep track of things better and see where that leads us. That makes sense, right?
Right, right. And again, every individual is different. I mean, there may be people who just don't need to use them, period. In the same way, I don't need to have double stuffed Oreos in my cupboard.
Do you personally use a credit card?
I do. And that was the other part that was bothering me about the advice I was giving, was that there was a layer of hypocrisy to it.
Sure.
And the only way I could justify the hypocrisy was, well, I'm responsible enough to, but you're not, which I just couldn't reconcile that anymore. I do, but I keep it very clean. I have a debit card. I have a credit card. I don't have multiples, and I pay the card off every month. And I mainly use the credit card, like I said, just for, I'm a little paranoid about all of the online. I mean, because we make so many of our purchases online now, I'm a little paranoid about just putting my debit card out there. I want to kind of hedge my bets and limit my
Yeah,
exposure.
I'm not. It's funny you bring that up because I'm personally not a big fan of debit cards, and I know some people are, and there's some advantages to that because it's a way to get the convenience of credit cards, but instills more discipline because you need the money in your bank account. But I don't. I'm not. I don't use a debit card. I don't think I'll ever use a debit card. I know the arguments for and against it, but I'd rather use the credit card. I feel like I have more protection that way. I did have my daughter, who's now 20, when she went to school, in high school, when she got a job and first started handling money a little bit, and through her college, used a debit card. And I thought that was a good training ground for her to be able to learn some good money concepts. But Joelle and I, my wife and I, we haven't used a debit card. So you generally would suggest people shy away from debit cards?
No, no. I think both of them have their place. So I'm not gonna take stances against debit cards in the same way I'm not gonna take a hardcore stance against credit cards. Again, my advice kind of stems from personal experience,
Hmm.
and literally in my money clip, I keep my cards in order because maybe I'm kind of a little anal that way, but the debit card is always first up, then the credit card. So I actually favor using the debit card, like for everyday expenses. So if I go to the grocery store, I'm going to use my debit card. I'm not going to use a credit card. To me, the credit card is mainly for online transactions.
Okay.
and it's more of a security thing. So I
Right.
agree that I feel like credit cards are probably a little bit more secure, but I'm just going for the balance between hedging my bets and having some security with the credit card. But I do like the immediacy of the debit
That's
card.
fair. Vince, going back to your podcast. So you're close to celebrating your 1 year anniversary for the podcast. Congratulations.
Are you?
Uh, can you think of a story from one of your guests or a topic from one of your guests that really stuck out as being impactful to you and or to your listeners?
If there's one thing, I went through a series of interviews and episodes where it seemed like there was a reoccurring theme coming up. And if I have a conversation enough times on a subject, it will finally get through my thick head. And the reoccurring theme was I am predisposed to be very analytical about finances. So, talking about, spreadsheets and budgets and this and that is really kind of my comfort zone. In terms of talking about the more relational things, that's probably a little bit more outside of my comfort zone personally. And one subject that kept coming up was the whole idea of understanding your partner's money past, which on the surface sounds just irredeemably ooey and gooey. And it's like, what does that have to do with money? Yeah, yeah, yeah. But the more times I had that conversation, the more it started to kind of even, I guess, sync with the more analytical parts of my mind, because it only makes sense that we all come to this subject of money from different life backgrounds, from different experiences. So it's only natural that we're going to have different views on how to manage money and what our money priorities are. And you can have the most elaborate spreadsheet and the most mathematically correct plan in the history of plans. But if you and your partner can't get on the same page to execute, you're dead in the water. So understanding your partner's money past and their stories really facilitates getting on the same page. And you have to get on the same page from a practical perspective to execute. So I think I've got a better appreciation of that.
Very good. And can you identify some common money mistakes that you find that you see individuals and families make that you like to speak to? What are some common mistakes you've identified?
I think the biggest mistakes, again, are more in the relational side or the behavior side and not so much in the numbers. One mistake that I see people make is you will have a couple and one person is all gung ho about, budgeting, or, they read a book or, listen to a podcast or something, and they're all charged up. Yeah, we need to budget. We need to save. We need to get our financial life in order. And they're just off to the races without really stopping to work with their partner who did not read said book, did not listen to said podcast, and is not particularly all fired up about this.
Yeah.
And they're just off to the races without syncing up, without getting on the same page in terms of what the why is and what the payoff is. And that just really sets up a situation of friction. And you can do it that way, but you're setting yourself up to do this whole thing by brute force. And that is a horrible way of doing it. So step back, define what you're doing this for, because, when you bring up something like a budget, I mean, that has kind of a negative connotation to it for a
Sure
lot
it
of
does.
people. And it's like, okay, if we're going to go through this, what's the end goal? A lot
Right.
of people, maybe the CFO at home enjoys frugality for the sake of frugality, but their
Oh,
partner doesn't.
yeah.
So
The
define
budget is
things.
just a tool, and you have to be mindful of the why. Why are you doing a budget? Why do you want to be purposeful? Why do you want to instill some frugality or financial discipline? You need to have a powerful why in a relation, husband and wife, partners, what have you. You need to find some common ground on what that powerful why is. And then there's any number of tools and strategies, techniques, and things you could do to carry it out. But that why is incredibly important.
Right. And without that, you're left with, he doesn't listen, she doesn't listen, they won't get on board, they're not serious about our future. And you just kind of get stuck in that place as opposed to moving forward.
Sure. So I'm thinking, as we're talking about this, I don't think I've ever spoken about this on my podcast or anywhere, but I'll be married 25 years in August. I think we've been married about the same amount of time, right?
Yep.
So my first fight with my wife was as follows. I was single. She was single. We were young, and money would come into my checking account as a single guy. And I was a financial planner, right? I'm motivated, save and invest. So I would come in, I would pay the bills. I didn't have a lot of bills, pay the bills. And then I pretty much invest everything else and run the checking account down to virtually nil because it was just me. I didn't really need anything. Simple life. I'm working like 68 hours a week. And that's how we did that. So you fast forward, we get married. Now there's more money tumbling in because we have the two incomes. The bills haven't gone up that much. And I'm doing the same thing, right? And Joelle, her niece, our niece, comes to the house and wants to buy Girl Scout cookies. And Vince, there was not enough money in the checking account to buy the Girl Scout cookies. Boy, that was my first introduction to taking incoming fire from your spouse because she went crazy on me. Like, what are you doing? We have money going here, money going there. We brought this much money in and I can't buy $20 worth of Girl Scout cookies. And that certainly backed me off of my strategy.
Lesson learned.
Yes. And so what we did was, we compromised and did what she wanted. And we established like, okay, here's a minimum amount of money. Here's a reasonable amount of money that we shouldn't go below so that if stuff comes up. And it was obviously it was an impactful moment. I remember vividly.
Very well and carefully worded.
Yeah. So we've talked in the two conversations about a variety of things. It's been great conversation. You seem extraordinarily responsible and curious about personal finance. I'm sure you help a lot of people. But let me ask this final question. Can you give an example of something that you splurge on?
Wow. Something that I splurge on. I guess splurge is relative, first of all. And if there's one thing that we splurge on, because it's kind of a family thing, are probably vacations.
Okay.
Because that, in the world of things versus experiences, I'm much more of an experienced person. And I value having experiences that are memorable with my family. So if there's one place where, relatively speaking, I'm going to loosen up a little bit, it'll probably be vacations.
Very good. Beautiful. So thanks for spending time with me today. Tell everybody where they could find your podcast, the CFO at Home.
All right. CFO at Home is available on Apple, Spotify, all of the standard podcast apps. And you can also find us at our site, thecfoathome.com.
Beautiful. And listeners, thanks for spending some time with Vince and I today. I always request that you subscribe to the podcast. If you haven't already, you could also check out more information about how I help my clients win with money by going to our website, which is elliottwealth.com. Thanks for listening, and I'll be back with you on the next episode of the Simply Financial podcast very soon.
The views expressed are not necessarily the opinion of SagePoint Financial Incorporated and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. Past performance is not a guarantee of future results. No strategy can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information should be relied upon when coordinated with individual professional advice. Please note, the information being provided is strictly as a courtesy. When you link to any of the websites provided here, you are leaving this website. We make no representation as to the completeness or accuracy of the information provided at these websites, nor is the company liable for any direct or indirect technical or system issues or any consequences arising out of your access to your use of third-party technologies, websites, information, and programs made available through this website. When you access one of these websites, you are leaving our website and assume total responsibility and risk for your use of the websites you are linking to. Securities and advisory services are offered through SagePoint Financial Incorporated, member FINRA SIPC. Insurance services offered through Elliott Wealth Management, LLC, not affiliated with SagePoint